So today I'm going to analyze the Forex market. This is December 15th of 2023. So we're not that long from the end of the year, and on this side of the year we only have maybe 10 days to trade. So this is the formation of the charts that I've chosen for you. This is a new account. It's a $5,000 account. I always start with Euro USD. This is like a M5 chart. Right here we're seeing a uptrend, and these vertical lines that you see, they are the beginning of the day and the end of the day. So the rectangle that I drew up there, this blue rectangle is basically the first market of the day. This is the Asian market before the London market. For yesterday, this here is the Asian market. The next one is the London market, and the last one is the New York market. Okay, so the New York and London market have an overlap, and here this rectangle is the overlap of New York and London. So let's talk about today. So we're seeing a downtrend basically from the beginning of the day. So at the beginning of the day we had some kind of range up there, and then we are seeing a downtrend. This is a big move that started from yesterday. As you can see, it started here yesterday. It was an uptrend to that high point, and then today is going back down to this low point, and it has completed a movement basically. If you see, if you look at this big rectangle here, you see this whole movement. It has started low there yesterday. It has gone up to some point and has gone back down at this moment. So basically we can assume that this movement is over, and we can just analyze if the price wants to go up, down, or zigzag inside this rectangle. Basically, I like to trade inside this rectangle. It means that if the price tries to go down and back up, I like to trade back up and buy from the bottom of this rectangle. Or if the price goes up and goes back down, I like to sell from the top of this rectangle, right? The rectangle that you're seeing here, you know. Or I like to sell down there because we are already inside a downtrend. Although the downtrend, in my opinion, is over, but because we're seeing this pressure downward, it's better to sell. You know, it's always better to trade with the trend. Trend is your friend, as they say. So let's look at some other charts. For example, pound yen. Pound yen is basically in a large range from yesterday, almost New York, and it has done a surge out of that range in the Asian market at the beginning of today, but it has gone back down with a huge gap downward. So we're basically seeing a stalemate happening here. So we need to see what's happening inside this range movement, what's happening there. Let's just go and see a USD pair. So with USD CAD, we're seeing a range happening down there. You see all these small candles. They are creating a range in this area. And by the opening of the New York session, with this bull candle, the price has gone up, hit the opening price of the day, and now with three bearish candle is going back down inside this range. So we basically have nothing here. It's just a movement upward that has done its move, is finished, and is going back down inside this range. Let's see what's gonna happen for this chart in a few hours. Let's go back and take a look at your USD and see what's happening inside that rectangle that's happening down there. No, we're not seeing any good pressure of buy, so we're just gonna have this in front of us to see what's gonna happen. So let's take a look at Nasdaq chart. Okay, so right now what's happening is that this price is high of the day, so all the price is happening inside this big blue rectangle, right? And the price is trying to break out from the high of the day. The low of the day is here, and the high of the day is happens somewhere between inside the London market. And now that the New York market has started like almost an hour ago, it is trying to break out of that high of the day. But when I take a look at this is an interesting chart. We can see these big bullish candles, right? These big black candles. And what I'm noticing is that with just 2 or 3 candles, the price has come down from the high of the day almost all over, almost to the half part of this big rectangle that we have. And while the price has gone up backward to the high of the day, we're seeing that it is struggling, because just look, with only 3 candles or 2 candles, all the price has gone down, and it's taking 7 or 8 candles, white candles, to go back up to that high of the day. So the buys are not that strong here, right? So we can be waiting for a sell opportunity. Okay. So what I'm gonna be doing, so inside this rectangle, inside this V movement that you see going down and going back up, the sells are way more strong, right? Because they're moving with less resistance, but the buys are moving with a lot of resistance. Okay, so I'm gonna wait and see what's gonna happen at the top of this range, because I think that probably this price is not gonna have enough juice to get out of this range. And if the price is going to come lower than the first price that this candle is trying to break, okay, what is the price that this candle is trying to break is here, right? So this big sell candle has tried to break down there, okay? So if I see a good pressure on this price right here, I'm gonna sell at this point, okay? But we need to be a little bit careful, because it's almost 5 minutes before New York stock market open, okay? So before the stock market opens, we need to close any kind of trade that we're gonna open, if we open some. So let's see. If I get into this trade, my entry is gonna be that middle line, my stop loss is gonna be that red line at the top, and my take profit is gonna be this red line at the bottom, okay? So far we are seeing a break out of this line. Let me make sure the buys are not that strong. So I'm waiting right now to see what the buys are doing. So the buys are coming back, they're taking the price back up. So if the price comes back down and hits this line in the middle, hits this line, okay, and create a shadow at the top of this line, I'm gonna get into this trade and hit a sell right here. So we are 26 pips upwards to our sell. I want my profit, my risk to be $100, 2% on my $5,000. So I'm gonna put the volume on 0.4. Okay, so with 0.4, I'm gonna have a TP of $100 and a risk of $100. So we are inside this trade. I'm gonna put my take profit here is $100, and my stop loss here is also $100. Okay, let's see what's gonna happen with this trade. So when we are in a trade, we should just only wait and see what's happening. That's all we need to do. So because we are closing to the stock market open, if the price goes low enough, like right now, I'm going to put my stop loss after my entry. If this, if we get into the stock market area, it doesn't hit my stop loss, with the fluctuations of the market. Okay, so our TP was hit and it was a very fast move. This is the way that we should trade, basically, to see where the pressure is and recognize if the pressure is upward or downward. Most of the time we are trading this N pattern, right? We are understanding where the big area is and then create an N pattern inside that range. So here we had a big sell and a weak buy and again a big sell. So we recognized that sellers are bigger, we recognized entry, stop loss and take profit, and we had a successful trade. See you next time.